Back in early 80s, IBM issued a 50-year zero coupon bond. Those days, IBM was the tech company. Okay, I mean now nobody knows who they are. In fact, they gave their first big contract to Microsoft to develop the operating system for the first set of PCs. Let's say this was a 50-year thing. It basically says, okay, give me 1522 now. And interest rates those days were a little bit higher. So let's make that 6%. Give me $520 right now and make 50 years. I will give you $10,000. That's the agreement. Those bonds still have not been paid back yet. I think there is another 7 years on them, but that doesn't mean you have to hold on to them. You can actually sell them in the market. Uh, if all you're going to do is hold on to them, you don't have to worry about it too much. A lot of times, pension funds actually buy these things. Why? I'm a pension fund or I'm a Social Security trust fund. You know, people pay the Social Security taxes. You pay, I think, 6.2% of your uh, gross salary, gross wage, up to something a year. Oddly enough, you know, if you make $1 million a year as a wage, you pay exactly the same Social Security tax in dollars as someone who makes about 120 or so. Don't ask me why. You could actually save Social Security if you lifted that cap. But it's a political hot potato, so nobody touches it. Anyway, I'm a Social Security fund, and you know I'm going to make these payments in the future. You know, people who paid into this are expecting some sort of return, right? In fact, starting next October, I'm going to start withdrawing Social Security. I'll be only 62, but I can start at 62. And that's going to pay for the college loans I took for the kids. But who knows how long I'm going to live, right? Anyway, or there are pension funds of, you know, states, for example. Kentucky has two pension funds. One of them is KERS, Kentucky Employees Retirement System. The other is KTRS, Kentucky Teachers Retirement System. And they make promises. And you don't worry about it too much. But a lot of investors do. I'll give you the starkest example. Have you guys heard about a bank called Silicon Valley Bank? What did you hear about it? What, if any, significant thing happened to it? And it went under. These guys were the bankers for tech development and venture capitals in tech. Okay. At the time they went under, they had over $200 billion in assets. And they went under for a stupid reason because they didn't listen to me. Literally, they didn't listen to me. I was part of a consulting project. By law, Fed was their regulator, requires you to develop a risk management model. You tell the Fed this is how we're going to measure our risk, and based on the outputs from this, we will take these kinds of precautions. And compared to most other banks with large asset size, one of the things that was very different about this bank was more than 90% of their deposits were not insured. Why? Because they were deposits of corporate clients. They actually lent money to these venture capitals, And venture capital funds or individual tech companies, they borrow these, but unless they actually need them, they keep their deposits in there as well. You and I put money in a bank up to $250,000 per bank. We're insured. If the bank goes under, FDIC comes in and pays us. But here you had a lot of clients where and maybe they have $10 million, well, only quarter is insured. These guys got into a little bit of trouble for a stupid reason. Uh, you got to keep liquid assets to cover some of your obligations. These people put about, I'm going to round it up, $100 billion in long term treasury bonds. Okay. You're thinking, what's more, what's safer than that? It is the US Treasury. If anything, there is no default risk. People think, oh, US may not be able to pay it back. No government ever would default uh, on a security that is issued in a currency that has the authority to print that currency. Technically speaking, the authority to print US paper currency lies at the Fed, but US Treasury has the authority to mint coins. In fact, this discussion came about back in 2011 or so. Most of you guys were too young to remember this. There was the Tea Party movement started. It's basically baby MAGA. If you think about it, MAGA without Trump. That was the Tea Party movement. And these guys kept saying, we're not going to allow the Obama administration to increase the debt limit. Do you guys know what a debt limit is? By law, Congress puts a limit over which Treasury cannot borrow. The trouble is, Congress also approves laws that has a lot of deficits. So, in order to implement those spending laws, Treasury has to borrow. If that limit is not increased, U.S. Treasury will not be able to fulfill their obligations. Of course, such a thing would be a disaster. I mean, World War II would be a picnic. Trust me, if something like that ever happens, because the entire world financial system will collapse. And when that happens, those nuclear bombs are going to be flying everywhere. Yes.
I've heard some theories about some stuff about trying to dissolve our debt and trying to do it with crypto or some means. Have you heard anything about
You can inflate it away if you want to.
Yeah.
But trust me, that's not going to be, technically, it's not going to be default, but it will be something like default. For example, US national debt is about $36 trillion or something like that. Tomorrow, let's say Trump went completely off the reservation. I'm biased. I'm a bleeding heart pinko liberal commie. Not that he's too far away from there, as far as I'm concerned. Let's say he completely went off the reservation, and he told the Treasury Secretary, "You have the authority to mint coins, these quarters and stuff we have, but the law doesn't say anything about the denomination of those." In fact, this discussion came about in 2011 in case Congress did not increase the debt limit. All you have to do is mint a coin that's as big as this and write $1 trillion on it. Mint 36 of them. As soon as you do that, that is legal currency, legal tender. You put that into your account in the Fed, and Fed immediately says, oh, you got $36 trillion. And using that, pay off all the national debt. You can, but the inflation rates Probably is going to be 1,000% a month, which is hyperinflation. We will be like Zimbabwe. Those guys had a hyperinflationary period. At some point, they had a banknote called $100 trillion in Zimbabwean dollars. Something similar happened in early 20s in post World War One Germany. Of course, those days it was not called World War One. Nobody thought there was going to be a second one. It was called the Great War. Uh, of course, it was because of the French. As part of the treaty, French insisted that Germany would make reparation payments, which were horrible. I mean, the country was bankrupt even before those. Do you know why British and the French and the Americans won the First World War? A, Americans came in, and B, Germans and Austrians ran out of money before the British and French did. I mean, if they were able to hang on a little bit longer, the Germans and Austrians would have won. So the damn country was bankrupt to begin with. Then French insisted that Germany had to pay reparations. Of course, they printed money to be able to make those. At some point, I think we had 1 billion Reichmarks banknotes. I mean, you basically went to work in the morning, they paid you. If you waited until the evening to do your grocery shopping, that thing bought only about half of what it would have bought last week.